All right, good afternoon, everyone. Futures Barizio here. It is 2:15 on Wednesday, April 30th. Hope everybody's doing great. And seems like I say this a lot, but I apologize for not making a lot of content the last few weeks. We had a lot of visitors here, so not that I wasn't on the charts, but I just didn't really have time to make content. And actually, I'm heading out of town again tomorrow. Through Monday, so this will be my only video this week. And hopefully, once I get back next week, I'll at least be around for a couple of weeks making content before I head out again later in May. So, just a lot of crazy stuff going on. So, basically, in this video, guys, just going to do a quick review in futures. And again, just talk about simple price action. I know I've made a lot of videos lately using things like money flow index and things like that. And again, it's because, if you like using indicators or moving averages or things like that, I just want to be able to show you a few different things you can do. But at the end of the day, I still, at least for me, I keep getting drawn back to just simple market structure. I don't really get into smart money concepts and fair value gaps and all the fancy SMC terminology, but market structure is market structure, and especially on higher time frames, I think is still the best way to go. So we're just going to review basically three charts here: oil, natural gas, and copper, to show you, real time what's going on right now. And actually, natural gas and oil have very, very similar setups, and copper seems to be a little bit ahead, a little bit more tricky. But we'll review that too. So let's just do oil and natural gas first. So let's start on natural gas. So let's go to, this is the 4-hour chart of June natural gas. Obviously, I'm looking at current price action. So you can see last week, late last week, we came down, we put this low in, then we tried to come down again, and then we put in a higher low, came back up again, tried to come down again, put an even higher low, and then this big bullish candle up. This was on the 28th, so this was a couple of days ago, 2-3 days ago. On Monday, we put in this big bullish candle. Okay, and then since then, we're kind of just going sideways. So then what we have now is, on this time frame, is not really all that clear. We'll talk about what I see on the shorter time frame. So from a longer term standpoint, this looks a little bit more bullish. Now, if you look back in time here, we had another big bullish move up right here, but eventually this broke down and continued to go lower. But there's two big differences between this and this. Move this over. This is too much. Move this over to here. Okay. And it's pretty much what I just pointed out, is that when we were making this down move here, we had this swing high led to this low, and then we shot up. Okay. It was a clear 2-candle move up, and then the downtrend continued. Over here, we put in this low here, and then, like I said, we put in 2 higher lows, and then we had this bullish move up. Okay, so the 2 higher lows, which you can easily see just by drawing a little trend line here, you can see these are definitely higher lows, all 3 of them. Okay, is not the same as what we saw right here. So on the 4-hour time frame, this does still look fairly bullish. Okay, just because we put in 2 higher lows and then a bullish move up, and now we're consolidating. Whereas remember here, we had a lower low put in, 2 big 4-hour candles, and then price immediately started selling off again right after that. No sideways price action, no indecision, just boom, boom, 8 hours of pushing up, and then, prices coming right back down, continuing the downtrend. Okay? And basically this was a liquidity sweep candle that kind of swept out this high right here, and then eventually the downtrend continued. But here we've put in 2 higher lows and then this move up and now consolidation for the last couple of days. So this on a longer time frame still looks pretty bullish, right? That we came up and now we're just kind of taking a break. Price is kind of drifting lower. And then, potentially we'll snap and go higher at some point. Okay. Now, if we go to the hourly time frame, what do we see here? Well, on here, now if we forget about what we see to the left, so get rid of this box. Okay, what we see here is that here was that big move up. Price one side. Now, on the 4-hour time frame, we had this little sideways consolidation and then a new high was put in. So that's right here. Here was that consolidation. Price pulled back and then put in another new high right here. Okay. So if we look at this candle right here as the pullback low that led to this high, that I'm looking at as the market structure. Okay. At least the short-term structure. And what do we have now? And I'm going to just put a real horizontal line instead of trying to draw a horizontal trend line. Okay, so we have this area right here. Okay, price pulled back when we had this low led up to this high. And now we see price has just been kind of consolidating, drifting lower. Okay, and then it broke this market structure, this low, all right, or this candle broke this market structure right here. Okay, so now the question is this a liquidity sweep? Okay, meaning that the market is up and this is just basically a stop loss run, a liquidity grab, liquidity sweep. You want to talk about smart money concepts, chapping into liquidity, running stop losses down here. Is this just a sweep of liquidity, a sweep of stop losses for maybe people that were long in here and have their stop losses sitting right underneath this recent low? Then the big traders know that. They target those lows and they push price down just enough to knock people out of their trades that are long, and then they continue the uptrend. Now, that's a good theory, but, the issue is here. When price did start coming back, which was on this candle, it failed to make a new high, right? It came out of here. It was looking really good, and then all of a sudden it just stopped and went down again. And failed to put in a new high. It didn't even take out these intermediate highs up here. It just stopped and came right back down. So that's, of course, is a little bit concerning if you're a bull. Okay. Now the other option on this is that this is a break of structure, right? This candle broke the structure of this low, this structural low, broke it. This is a pullback. And then eventually this is going to roll over and keep going down, right? So break a structure, pull back, some period of consolidation as the bulls and bears fight it out in here. And then eventually rolls over and goes back down. Okay? So the question is, which is it? Well, I don't know. And I don't sit here trying to tell you that I know. If you had asked me while this candle was forming, I would have said, oh yeah, this looks like a liquidity sweep. We're going higher. But now I'm not so sure because, we pulled back, again, failed to make even an intermediate high up here. Forget about this high. And now we're just kind of chopping along sideways. So let's see what happens. Basically at this point, I think you have to, start going down to even shorter time frames. So again, here's that sweep low or break of structure low right here. Price went up, came down. Tried to go lower. We did, stop right here and then tried to go higher, failed. And now you can see we have put in another lower high. We're now at 3 lower highs. Okay. We had this lower high versus this one. And now this one's lower than this one. This one's lower than this one. Okay. So there's a lot of uncertainty in here. Okay. But this is the cool thing I think about market structures. You can at least have a way to look at this and say, all right, I'm not ready to take a trade on this yet. I'm not, especially because I don't trade. I'm not scalping. This is really for you day traders and swing traders. For you scalpers, this probably doesn't apply because you're probably not looking at these longer time frames because you're only in and out quick. So I'm talking to you day traders and swing traders. Okay. So I don't know what's going to happen here. Again, bigger picture on the longer time frame, have we broken the downtrend? Well, it depends what you want to use as a structure area. We did come in and like fill in this little gap over here. We have this, kind of, this little pause area, but I don't know if that's really worth considering or not. And like I said, we did put in higher low and a higher low back here, which we really haven't seen that when prices continue these downtrends before. Okay. We had this low here. We had a higher low put in here. Okay. Price went up, came down, put in another higher low, and then put in a lower high, and then came down. So we kind of had a similar look back here to what we have here. Again, the market's not perfect. It's never going to be exactly repeat. So this is pretty interesting. So, I'd like to hear if you guys are watching this, what do you think? I mean, do you think we're looking at a continuation of the downtrend eventually? Or is this all just a pause in this new up move that's going to eventually pop out of this range and go higher? So basically, I would like to just wait and see what this does. If we come up now that we have this little mini trend line right here, I'd like to see to even think about going long. I'd like to see price come up and take out this intermediate, this middle swing high right here. So maybe see price get above here, and for sure, clear out all of these equal highs up here. But it just depends how aggressive you want to be, and you can do that on a shorter time frame. Here's a 10-minute chart. You could come down and, you could even say, well, now that we've already hit this trend line, if we come back here again and take out this third touch, then that probably means we're going higher. So, you could think about longs anywhere from this area here. Okay. And then in terms of short, for me, I'd probably want price to take out this low right here. Okay. Because we've already put in this little low right here. Price comes down here again, takes out this low, especially if this turns out to be a lower high. Price comes down, takes out this low right here, then we're probably going to go lower. Okay. So for me, the kind of lines in the sand are below this low right here, or above somewhere in this area right in here. Okay. Break out of somewhere in this zone right here. And, right now we're just consolidating. It's not really a good time of day. We're into the mid-afternoon. The market's probably not going to really do too much anymore the rest of the day anyways. Sorry, I had to take a drink. And so we'll see. So this is why, especially if you're trading on higher time frames, you do have to be a little patient. You don't want to jump the shark too early here because, we don't know. Is this, again, is all of this, these little small range candles on the 4-hour just kind of like the market dead cat bouncing and, it's just going to roll over and eventually the downtrend continues? Or is this a pop higher and there's a lot of accumulation going on here? Buyers and sellers are fighting it out and eventually the buyers will take over and pop this higher. Either way, there's a big battle going on right in here. I don't use volume profiles, but I'm not going to get into it, but I bet you if I put a volume profile in this chart, you'd see a very big high volume node somewhere in this area. I don't know if it would be the point of control, but it would be a high volume node right in here because clearly there's a lot of fighting going on at these levels right here. Okay. So that's natural gas. And we see kind of a similar situation. Well, actually, no. We did see a similar situation on oil, which is now played out. So the chart doesn't look exactly the same. Go back to the 4-hour chart of natural gas. So if you see this, and now you go over to here, this is a little different because we were putting in structural higher lows here. But so we had price come down, put in this low. Then we had this big move up. Kind of came back to this area here, started to roll over, go back down, put in a higher low, and then we started putting in what? Higher highs and higher lows in this stair-stepping fashion right here. Okay? So you, of course, could have traded this to the long side. And then what happened? This is where the similarity with potentially natural gas, although this has already happened, might be. Because we came up, put in this higher high, came down, and then if you just focus on this area, if we focus on this area right here, we had this low right here, this little swing low that led to this new high, and then we had this low right here, which took out this was a, at the time you didn't know whether this was a sweep or a break of structure. Is this a liquidity sweep to take out people that were long with stop losses sitting under here, took them out? Or it could be people that just scalping on a shorter time frame, you know, just taking profit right here, like they went short up here somewhere, trading on a short time frame, and they just targeted this previous swing area. But either way, you know, there's a bunch of buy orders that got triggered here, either stop loss orders of people that were sell stop orders for people that went long, or buy stop orders for people that were short and took profit in here. Okay, so it came down. So again, is this a liquidity sweep or a break of structure? Well, at the time, of course, we wouldn't really know, but we did see price pull back in, and this is usually what happens, guys. When you do have a break of structure, be very patient and understand that you're probably going to see price, no matter what it ends up doing, but especially if the trend continues from that break of structure, in this case a downtrend, understand that unless there's some big news event where the price just tanks and just never looks back, and that does happen sometimes, but in just the course of normal price action, when you get these break of structure, especially on higher time frames, be prepared for a pullback back into the range, which is what we got here. So we had this break, and then these are 4-hour candles. So for like 2+ days, price went back into the range and essentially just range bound for 2 days. All right. And then eventually we rolled over, we came back down, you know, we took out, you know, I would have considered this to be, you know, the last little internal swing here. So once that was broken in here, then obviously, you know, the short ensued and price has gone down since then. Okay. So this is basically natural gas, just it's already happened. Now it's not quite the same. It doesn't look quite the same. On natural gas, we weren't putting in these higher highs and higher lows. We basically we put in that big move up and then we went sideways from there. We never really made any more progress to the upside, which actually is fine because on this you could have traded this, but we're not seeing that in natural gas. We had the move up and then we've just gone sideways ever since. Okay, but again, pullback led to a new high. Price comes down, big bearish candle, sweeps out these lows under here. Stop loss orders, take profits for short, stop loss orders for longs. Price moves back into the range, consolidates for a couple of days, and then eventually it rolls back over. Here's the 1-hour chart. So here was that last high. Price came down, tried to go up again. So really on the 1 hour, you could have shorted this on the 1-hour chart. As soon as price put in this lower high and took out this market structure right here, you know, if you want to trade off the 1-hour chart, you know, right in here would have been a great place to go short, right? Price broke, did pull back a little bit, but as long as you had your stop sitting like up here or up here, you would have been fine. And then we had this huge move down. Okay, it broke through this level, came back again. So this would have been another entry point in here. If you missed this one, you could have taken this one. If you missed that one, you could have taken this one. Okay, so whatever. The entry is not really the important part of this. It's just looking at what led to this move. All right. So again, pull back, move higher, break of structure in this case, because we know now this was not a liquidity sweep because it did not continue to go higher and put in a new high. This was a BOS right here. Okay. And then price consolidated, chop, 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 a couple of days, tried to go higher, kind of fool people into going long. on this candle right here, but it never broke this structure up here, not even close, and then eventually rolled over. And on a shorter time frame, you could have entered in here somewhere. All right. Yeah. So that is crude oil. And now we'll just take a quick look at copper. And copper is a little bit like crude oil. Okay. So on copper, again, we had a downtrend. We came down here. We put in a higher low. Price, put in this new low, went up, came down, tried to put in a new low, failed. And then eventually we got a stair-stepping move up. Higher low, higher low, higher low, higher low. Came up here, put in a high, came back. All right. This is a higher low. Although technically this was your first warning sign. Pull back, tried to go higher, failed. But even if you didn't see that, pull back here, higher low. Okay. And then price again, tried to come up again. Failed. We put in a lower high, and then price started breaking down. This is the 2-hour chart. It's a little harder to see this on the 4-hour chart, which is why I went to the 2-hour. But clearly you can see stair-stepping price action higher, and then failed failed to go higher, so lower highs. Especially on this one, I have this little trend line drawn here, and then price eventually broke down. On the shorter time frame, again, where could you have entered been? Well, it depends what time frame you want to enter on. This is the hourly chart, a little bit more conservative, but we had this last little pullback that led to this failed new high. As soon as the price came down, breaks this structure. So anywhere in here would have been your entry, and you'd still be in this trade. If we concentrate on this area right here, okay, then you probably could have fine-tuned this entry instead of getting in at the break of this low. Maybe you go down to a 15-minute chart, and you can start to see the stair stepping down right here, right? Came up, failed, pulled back, tried to go up, failed. So a more precise entry would have been like right in here as opposed to down here. But whether you got in here or whether you got in here, at the end of the day, this still would have been a very profitable trade. It just depends how much time you have to, analyze the chart and how, aggressive you want to be on entry. But this is the 15-minute chart. So on this chart, really, the close of this candle would have been your entry. On the hourly chart, then, anywhere in here would have been your entry point. So yeah, so hopefully that makes sense. And again, guys, it just comes down to just following simple market structure. Now, I like using the 4-hour chart, or in this case for copper, because it's not as obvious on the 4-hour chart. Because on the 4-hour chart, your structure point is really probably, right in here or even down here. It's a little bit harder. That's why I went down to the 2-hour chart. I don't like to go too low because, again, the lower you go, it starts to get really noisy. I think crude oil and natural gas are a little bit more obvious in these particular setups than copper. But again, just following simple market structure. So on copper, certainly I think, this probably will continue down. We'll probably, reach for these lows down here. Price tends to want to go to liquidity pools. There probably are liquidity pools. And there might be one in the short term sitting right here. So I think these lows down here is a minimum target. Maybe right here. If we get through there, then, I'm sure we'll easily get back down to this level in here. Okay, we did try to reach down to here today. We didn't make it, but I do think price will roll and keep going. And this area in here, I think, is a minimum target. And if we clear out this, then probably back down here, these lows would be the next target on copper. Okay, so again, the one that still we don't know how it's going to play out right now is natural gas. So let's keep an eye on this. Because again, the two possibilities here is that this was a break of structure and now we're just pulling back putting in lower highs and eventually roll over and go down, or this is a liquidity sweep and price eventually will get its footing and pop higher. If it takes out, again, this maybe something in here to take out one of these little sub-trend line highs right in here, this one or this one. We get through there definitively with a nice bullish close, then we'll go higher. Okay. I'm not going to state what my bias is because that tends to lead to unconscious bias. We'll just let it play out and see what it does. Although it's not looking very strong. We do have candles that are trying to go up. You can see they have a lot of big wicks on the upper side and not many on the downside. And when candles do go down, we get like big bearish candles like this one, with no wicks and closing at the lows. That's pretty bearish. But when we do go up here, we have a lot of big wicks on these bull candles right here. This one, all of these, where the buyers are trying to step in, they keep getting rejected. Okay, so it's not looking really bullish, but again, anything that's happened in the last 3 or 4 hours probably doesn't matter anyways because the time of day we're in. So you can almost throw out all of this price action that's happened since lunchtime or so. But we'll see, what this does. So this is a really good test. It's a good test for me. It's a good way to practice your resolve and your patience, and also just kind of hone your price analysis skills and your market structure skills. And I take a lot of screenshots before things happen. I have a folder on my computer, and I'll take a screenshot of like the 4-hour chart, the 1-hour chart, and then maybe even a 15-minute chart or something smaller if I want. Although I don't usually screenshot the real short time frames because when I get down to this level, 15 minutes or lower, it's really just to fine tune an entry. It's not really, by then I've pretty much made up my mind which way I think price is going. It's just a matter of finding which time frame I want to enter on. But I'm not really doing analysis off of these, like this 15-minute chart. Like I said, by the time I get to this point, I've pretty much decided what I think is going to happen. Based on the 30-minute, 1 hour, 4 hour, somewhere in here is where I'm making my decision, and then I'm going to a shorter time frame maybe to find a more precise entry point and stop loss area if I get into a trade. So, all right. Yep. So that is pretty much it. These are really the only 3 markets I'm looking at now. And crude oil and natural gas, while they often do move overall in the same direction, they don't necessarily, and they are different in a lot of other ways. So copper is kind of its own beast. It's a pure industrial commodity, so it really is driven a lot by economic growth in general, but particularly production. Copper is used in a lot of, like I said, industrial applications. So that's really what drives that. But again, for all 3 products, a strong economy is probably going to lead to higher prices in all 3 because natural gas and oil, a strong economy, a lot of transportation requires more energy, so it's more supply to be needed, and so that drives up prices. And copper is an industrial metal, so as the economy grows a little bit, it will the demand will go up, especially if there's industrial growth. You'll see copper prices go up. So anyways, that's kind of that. I'm gonna just leave it there. Hope it was helpful. As always, guys, make sure you smash that like button, subscribe to the channel. Questions or comments, leave them down below. If anybody has any opinion about any of these, if you trade any of these, feel free to drop it in the comments. Alternative view, what have you. That would be helpful because I'd be curious to see what you think. And then we'll end up letting these play out. Unfortunately, I may not be around to make a video on this, but I will keep an eye on it and take some screenshots, and then when I can get back on here, we'll review it and, you know, see what ended up playing out and what ended up being the right move based on what price actually ends up doing, and not just, you know, doing analysis and trying to project. Just let the market play itself out and see what happens, and we'll go from there. All right, guys, so have a good rest of the day. If I don't talk to you, have a good rest of the week, and I'll try to touch base sometime next week. I don't think I'll get a chance to make a video between today and next Monday after this one. If I do, it'll be a quick one while I'm traveling. And maybe I will if we get some follow through on this natural gas chart. If this does finally break out one way or another, then maybe I will jump in here. I mean, who knows? This could just sit here and just chop for the next several days and not do anything, and that's fine too. But if we do definitively get a move going here, whether it's back down from this as a break of structure, or if it starts going back up as a liquidity sweep off this low here, then maybe I'll make a quick video and just, you know, bring you up to speed on that. But outside of that, we'll probably just hold off and take some screenshots and be back with you next week. All right, guys, take care. Have a good rest of the day, and we'll talk to everybody soon.